everyone. Today I thought I would go over mortgage interest rates and some of the factors that play into how those are set generally, and then the factors that play into your individual mortgage interest rates when you're shopping for a mortgage loan. So first of all, some of you may be surprised to hear that the Fed or the Federal Reserve doesn't actually set mortgage interest rates. However, their decisions and their movement at the Fed can influence investor behavior, which in turn can impact the mortgage rates, but it's just one small part of a bigger picture. Some other things that actually determine mortgage interest rates are the bond market, inflation, employment data, economic growth, global events such as war, natural disasters, pandemics, political instability, etc. So now let's talk about what factors play into your individual rate quotes when you're looking to buy a home. First of all, I want to let you guys know that not all lenders or loan programs have the same rates. And you may not know this, but mortgage rates can change, and a lot of times do, several times a day. But the biggest factor in the rate you're quoted for your individual home loan is risk to the lender. The greater the risk to the lender, the higher the rate, and vice versa. For example, the better your credit is, the less risk there is that you might default on the loan. The same is true for the more money you put down and whether you will live in the home or if it's an investment or a second home. Some other factors are the types of loan. VA, FHA, some of those have pretty competitive rates even with a low down payment. Some other factors are the length of the loan. Is it a 15-year, a 30-year, and your down payment. The higher the down payment, the less risk, the more you have invested in the property, so the lower your rate might be. Another question I hear a lot is, should we buy our interest rate down? So let's take a look at this. Let's pretend that you're going to purchase a $250,000 home at a 6.5% fixed interest rate, and it's a 30-year loan. Your monthly principal and interest payment would be about $1,580 a month. But your lender tells you that you can buy the rate down to 6% for $2,900, which would lower your monthly principal and interest payment to about $1,499 a month. This gives you an $81 a month savings. One thing to note here is when you are buying your rate down, it does not go point for point. And so, if you pay 1 point, which is 1% of your loan amount, it does not lower your rate by 1%. The pricing of all of that depends on the lender, the program, so on and so forth, and how the lender prices the rates that they post. So just something to keep in mind. But let's look at this closer on the scenario that I gave you. If you bought your rate down from 6.5% to 6% and you get that $81 a month savings, when would you actually realize the savings? Because you just paid $2,900. So the way to figure that is to divide that $2,900 by $81, which is your monthly savings. And that will give you how many months it'll take you before you actually start seeing the benefits of buying that rate down. So $2,900 divided by $81 comes out right about 36 months, which is 3 years. So you won't see any savings benefit to that buy down until after you've been in that home and that loan for 3 full years. You are essentially prepaying the difference between that 6.5% and 6%. You're prepaying that for 3 years. So is it worth buying down the interest rate? That depends on your individual needs. If you believe that you're going to stay in this home and that loan for more than 3 to 5 years, then it may definitely be worth it. If you believe that you will sell the home or maybe refinance within 3 to 5 years, then it's probably not a good idea to buy that rate down. You can save your money for something else. Home improvements, kids, cars, bills, food. Anyway, that's the long and short of this. That's mortgage interest rates in a nutshell. Thank you guys for watching. If you have any questions, feel free to reach out to me and hit follow to learn more about mortgages, credit, interest rates, loan programs, etc. I hope you guys have a great day, and thank you for watching. Bye-bye.